G'day folks, Jim here from Orchard Forex. It is Saturday the 10th of April. Well, risk sentiment continues to underpin the stock markets with the major US indices all up by around 6.5% over the last month, while bond yields have eased back a little from their recent highs, where the 10-year US yield ended the week at 1.66%, below the recent high of 1.77, I think it was. The drift lower in yields through the week was reflected in a similar move in the dollar index, with the euro and the Swissy being the main beneficiaries of a softer dollar, although sterling traded heavily, and the Aussie and the Kiwi remain range bound for the time being. Looking ahead, I think that as the post-COVID world continues to develop and the global economy begins to recover with the help of government stimulus, including President Biden's rescue package, we should probably expect more of the same in the week ahead. On the calendar, aside from the usual run of events for the coming week, which we'll cover later, the US Q1 reporting season will also get underway on Wednesday, with all the major banks due to report before the weekend, with the other major US industries beginning to report starting next week, Monday the 19th of April. In the commodities sector, gold seems to have made a double bottom at 1675, but is stuck within resistance, or ahead of resistance, at 1755, and it remains to be seen if we can break above that. If we can, then I think gold could go higher, but we'll have a look at the chart in a second. Oil's consolidating near $60 a barrel, and it does look a little bit toppish, and we'll have a look at the West Texas Intermediate crude chart a little later. Before then, let's go and we'll have a quick look at the dollar index. As you can see, this is a daily chart. We really drifted lower throughout the week. We had a mild bounce on Friday. The daily charts still look heavy though, so the momentum indicators are pointing a little bit lower. As far as the weeklies are concerned, the chart looks quite positive, and the momentum indicators suggest that there could be further upside in the dollar in the weeks ahead. So while I'm a little bit bearish on it in the short term, I don't think we're going to see anything too directional, and possibly we should be looking to sell near-term rallies in the euro, buy dips in, say, dollar Swiss, because in the longer term, as I say, it does appear that the dollar could test the last week's high of 93.37, and if we could get above there, I guess we can head on towards the FIBO area at 94.5. That's some way off at this stage, so I wouldn't get too excited. But right now, going back to the dailies, I think I'd be looking to sell rallies in the dollar, with the 200-day moving average being an obvious point of resistance at 92.35. So that's only 15-20 points away. If we do go above there, well, we may break a little bit higher to this 92.85 level, but I would still be selling at the moment and looking for another leg towards the downside, with support coming in at around sort of this 91.75 and 91.30, which probably equates to somewhere near a 120 for the euro. Anyway, we're going to have a look at the euro chart. Okay, so here we have a daily chart of the euro, and as you can see, the daily indicators do suggest we can go a little bit higher. I would suggest that if we do head high, 119.90, that's the 55-day moving average, and 120.5. So somewhere in that sort of area, I'd probably be looking at. Right now, I like to be long the euro, supported by the 200-day moving average down here around this 118.75 area. I think we head up towards this sort of 120.5 area. Up there, I'd be probably looking to turn it around and go short the euro, looking for a further leg to the downside. But that's some way off at this stage. But so as I say, in the meantime, be long. We're going to have a look at the 4-hour charts, which are not suggesting a great deal. Maybe we just trade sideways on Monday. But as I say, I like to buy the dips. I don't think we're probably going back above this, below this 118.60 level early in the week. Near-term FIBO resistance, that's at this 119.5 area, 38.2 of the whole dip from 123.40. But if we get above there, then this high here, 119.85 and 120.25. As I say, I'll be looking to sell the euro into that kind of strength, and I'll probably put a stop loss on it above the 61.8% level. Moving forward, we're going to have a quick look at dollar yen. And here we have a daily chart. Once again, the indicators for the dollar look as though they're pointing lower, and I suspect that selling rallies in dollar yen towards 110 for now is probably the way to go, looking for an eventual break of this level down here, 118, well, call it 109, 108.95, and then moving on down towards this sort of 107 3/4 level, but that's some way off at this stage. If we go further out to the weeklies, the indicators here, as you can see, still look quite positive. The RSIs and the stochastics might be getting a little bit toppish, but it does suggest that we're not going to see huge downside in dollar yen. So probably, while I'm a little bit bearish in the near term, probably the longer term strategy guys will be looking to buy the dips, looking for another leg up towards and eventually above last week's high, which was sort of somewhere up around here, so like this 110.95. So ultimately, I think we're probably in a range bound choppy area for most of the currencies. Short term bearish to the dollar, longer term probably is slightly more positive. We're going to have a quick look at the Aussie. Now that the Aussie seems to be underperforming to me. Here we have a 4-hour chart of the Aussie, and it's really underperforming. It's range bound, it's not doing anything. But I think the global growth story, if it comes to pass, which I think everyone's expecting it will, that should see demand for the Aussie return. Now, if we go above this sort of level here, 76 3/4, then I think we probably can head a fair bit higher, and we can probably head back up to this sort of 78, 40, 50 level, which might provide some decent resistance. But if we can get above there, then I think we're heading back towards 80 at some stage. Right now, it doesn't look as though we're wanting to do anything at all, and the 4-hour charts are completely neutral as we go into the week starting on Monday. Moving along to the daily chart, that's not telling us a great deal either. As you can see, we're moving sideways in line with the 100-day moving average, which is the blue line here. The indicators are pretty neutral. So I think, while we're probably going to have some more sideways choppy trade, but I think I'll be looking to be buying dips towards the sort of 70, well, below 76 really. I think 76 should provide some decent support, although we're only 20 points away. Maybe allow for a dip to sort of 75, 75 and a half, 75.20, but looking to buy dips, hoping for an eventual break of, as I say, this 76 3/4 level. I think that I should just have a look at dollar Swiss, because that's relatively active at the moment. Now, dollar Swiss really has kind of been leading this move lower against the dollar, and the indicators suggest we're going to have more dollar weakness early in the week at least. If so, we need to really get below this support level here, sort of just above 92. And if we do that, well, there's not an awful lot until we get down to the 200-day moving average, which is at sort of 90, just above 91. I kind of expect that we're going to head in that direction, although the 4-hourlies are slightly oversold and turning higher. So once again, if we do see a bit of a bounce towards this 92.80 level on the day on Monday, I'd be looking to sell into that. Looking for that move. There's 38.2 FIBO level at 92, the figure, so that's going to hold it up just below these lows here. But if we go through there, then I think we can head back towards that 200-day moving average. The weekly charts still look mildly positive, so I wouldn't be getting too aggressive on the downside. As I say, I do think we are going to go lower early in the week, but I'd be looking to buy dips for the longer term strategy of another bounce back in a positive direction for the dollar. Looking ahead at the stock market, and here we have a daily chart of the S&P 500, and it's just continuing its slow grind higher, and I don't really see much to change that. The dailies are not overbought, but they are pushing further north every day. The weeklies are overbought, so an element of caution is required. We've also got this bearish divergence, which I pointed out before, but there's no point really fighting against the trend. You could lose a lot of money trying to fight this trend by thinking this is toppish. I think it's just something to bear in mind, but I certainly wouldn't be going short at the moment, particularly with the stimulus package that's about to land on the market in the second half of the year. So while I'm cautious, I'll be raising stop losses, but I actually prefer to stay long. As far as the Aussie market goes, the ASX 200 is lagging as it always does. in a rally. So we've been briefly above 7,000 last week, but the ASX 200 is kind of stuck just below there. I do think we're going higher. The dailies are beginning to pick up a little bit of steam, but it seems to be a slow process. If we do head higher, we're going to run into this channel resistance here. This is the 4-hour chart, and that comes in at around 70.40. We could see that on Monday. I think there's a good chance, but we really need to break above that to make a real positive move. But if we do, going back to the dailies, if we do get above this 70.40, then I don't think there's an awful lot. We might see a bit of catch up from the ASX 200. This is 7,200, the all-time high here. I think we could get back to that level quite quickly on a break of 70.40, but that depends, of course, on the other global indices heading higher as well. We'll have a quick look at gold and oil. Okay, so here's the double bottom that I mentioned earlier at 1675, but we are sitting up against this resistance here at sort of 1755, and we seem to be a little bit trapped at the moment. This is a 4-hour chart, and the 4-hour indicators are not really suggesting we're like to break above that early in the week. Maybe as the week goes on, maybe we could break higher. The dailies do seem positive, so I kind of retain a constructive bias. The weeklies, though, they're still negative, but they might be trying to show us a base. But coming back to these 4-hour charts, we really need to break above this, and if we do, then there's going to be various levels of FIBO resistance ahead, 1770 and 1785 being the immediate ports of call. So right now I'd be looking to, it's at 1740 at the moment, I'd be looking to buy it down around here, sort of this 1720 level. If it gets down back below 1700, I think I'd want to be out of it, because we're probably going to have another test of the downside again. But in the meantime, I kind of think buying dips, looking for the break of 1755 is probably the way to go. There doesn't seem to be much interest in gold at the moment. Markets are focused on stock markets really, but I think if we can break above this level, I think the interest in gold will pick up, because I think the market's probably still short. The market's been quite bearish on gold. I think they're still short, so we could see some decent short covering if we get up to this area. As far as oil goes, finally, we'll have a quick look at that. Here we have a 4-hour chart of West Texas Intermediate, and really it's doing absolutely nothing. It's for the last few days, since really mid-March, it's kind of travelled sideways either side of $60, and the 4-hour charts don't really show that there's going to be much of a change. This looks to be solid support here, 56.60. I'd be buying on a dip towards there, but probably with a stop loss below that level, sort of below $56, I guess you'd go, because then it possibly can head back a little bit lower still. On the top side, we really need to see a break of sort of 62.20 area. If we do that, then maybe we can head back up to this sort of 66, but I think that's some way off. As I said, the 4-hour charts are neutral. The dailies not showing us an awful lot either. We have got good support coming in here at the 100-day moving average. Where's that? That's at 54, and that's where basically the uptrend line lies as well. So if we do break this sort of 56 area, look to start buying again down around this sort of 54 area for another bounce to the top side. That remains to be seen, and is somewhere off at the moment. Okay, so that's about it. We'll have a quick look at the calendar. So for the coming week, Monday kicks off with a fairly quiet session really. We've got some minor Chinese stuff coming out, and then we've got EU retail sales, but there's not an awful lot later on Monday. Tuesday sees the Australian housing data. That should be very strong indeed, I think, and the Chinese trade balance. So we could see a bit of action in the Aussie. That aside, the UK manufacturing data, the ZEW, and the highlight of the day will be the US inflation figures for March. Heading into Wednesday, when the US reporting season really kicks off, but with the banks, that is, and we've also got the RBNZ interest rate decision, and they're not going to change policy. and likely to say what the rest of the world central banks have been stating recently, in that they'll do whatever they can or whatever's necessary to support the underlying economy. There's a little bit of secondary data out of the States later on Wednesday, but that's about it. Then on Thursday we get the Australian unemployment numbers. They'll be strong, but probably not as strong as the previous month, which were fairly outstanding. So we're expecting 35,000 by the looks of it, with a slight drop in the unemployment rate to 5.7%. We've also got German inflation data, and then later US retail sales, the Philly manufacturing Fed data, and some other secondary US employment figures. Finally, Friday, the Q1 China GDP, and the retail sales, that's expected to be another strong number. All the Chinese data is expected to be pretty strong. And then we've got the EU CPI, followed up by the US housing data to end the week off. So that's really about it. So all up, expecting a little bit of dollar weakness in the early part of the week, maybe throughout the week, but looking to probably buy dips for the longer term strategy. As far as the stock markets go, it's just stay long but keep a trading stop. And with gold, where it's a range trade really for the time being between 1720 and 1755, I think. But looking to buy a break of that 1755 area, hopefully heading up towards 1780. So that's about it for now. Have a good week's trading, and we'll talk to you next week. Cheers.